Welcome back to Cheddar. Well, today we continue our Idea of the Month partnership with Seeking Alpha, and joining us now is Seeking Alpha author Galileo Russell. Galileo, it's great to have you with us. We know you've been interested in Snap's drone ambitions here, and in August, early reports said the camera company was attempting to acquire 00 Robotics. What is the state of that deal?
Yeah, so this would be the second drone acquisition Snap would have made this year. I think they're going to try and build on their Spectacles product, and the New York Times actually reported in February of this year that Snap was originally working on the drone. Then they bought this LA-based drone maker, Control Me Robotics, in May. And now 00 Robotics would be one of their biggest acquisitions ever, and by far their biggest drone acquisition. And I think that kind of signals their move to try and launch some sort of selfie drone as their next hardware product. Or they're at least working on it, I think.
Okay, let's talk about Snap and hardware, because I'm a skeptic. I mean, Snap, of course, you know, in its filings to go public said, we're a camera company, but that is a nice little story and has a nice little narrative. But there's no question this is a social media company, and they get the vast majority of their revenue from advertising. Spectacle sales are down nearly 35%. We haven't really seen much activity around Spectacles since they were first released. An analyst last night was at the US Open where they have a Spectacles machine, and he said there's no line at the Spectacles machine. He sent out that tweet. I think it was Walt from BTIG who sent out that tweet last night. What do you make of Snap's future in hardware?
Yeah, I'm actually kind of a contrarian here. I think they're doing pretty well, and although Spectacle sales were down in Q2, I think taking a step back, you know, they sold about 100,000 pairs this year, did about 14 million in revenue. This was a company that had no hardware experience. You know, Google Glass. You know, I think having an augmented reality glasses or glasses where you can film something was kind of new socially. And so for them to pull it off and see that kind of adoption they did with no distribution, having never done hardware before, I think sales of 100,000 units this year are pretty good. And I kind of look at it as a beta product for Snap. I think they're working on a second version of the Spectacles as well that are going to be really cool. And I just think they're going to keep the ball rolling, building experience with hardware. And so I'm kind of taking a more patient, long-term approach, and I just think it's, on a broader level, very interesting that Snap is choosing to go into hardware. This is something we haven't seen any other social media company do.
And is the hardware just something that you think they absolutely need to at least try now? We had a guest on earlier this morning, Alex Heath with Business Insider, saying that Facebook really wants to now. Everyone knows it as this very successful software company, but it wants to be a hardware company as well. Is this something that Snap just feels like it needs to do? I mean, it would seem as if, based on the reports that we've gotten, the content, the advertising associated with that content seems to be at least the driving force for Snap.
Yeah, I mean, I don't think it's necessarily what they need to do, but I think it's part of Spiegel's vision. And you made an interesting point about Facebook trying to follow Snap into hardware. I think it's fascinating that, you know, Facebook's worth 500 billion, Snap's worth about 20 billion, but Facebook seems to be copying Snap. So it's kind of like Snap's the innovator here, and I think Evan Spiegel is really the only one who knows the kind of vision of their hardware roadmap, but I think it's very fascinating to see a company like Facebook that's so profitable, so dominant, choose to follow and copy Snap. You know, I think that kind of shows who the real innovator in the space is.
Snap right now trading at about $14.85 a share, down nearly 40% this year. Do you think it's undervalued?
Tough to say undervalued. It's still about 20 times sales. If you think they're going to do about $1 billion this year, maybe they scale to $2 billion next year. So at a $20 billion valuation, I think that's still very pricey. But if you're a long-term believer in the value of this platform, you know, they have 173 million daily active users. If they can keep growing that, they have a huge audience. And so I think there's a lot of potential here long-term. You know, Facebook, Google, they own these platforms like Instagram and YouTube that are worth hundreds of billions if they monetize correctly. Snap's only in the second year of monetizing its platform. So I think if you're patient and they can fend off Instagram, then you have a lot of upside in the very long term here, but I'd be cautious about picking whether it's a buy now.
But they've kind of proven that they have been able to fend off Instagram, right? I mean, that's kind of, Instagram has more daily active users in its stories platform alone than Snapchat has in terms of its entire product.
Totally, and it's kind of an interesting dynamic because Instagram already has so many users on its platform overall that, you know, a portion of them just clicking on stories is a much easier engagement than going on Snap for stories in general. But, and once again, I think, you know, that was definitely a big hit to Snap for Instagram to go into stories. Now Snap's not the only social media company selling a stories ad product, so I don't think that helps them either.
Okay, so you have a YouTube channel also called HyperChange TV where you talk about finance, economics, technology as well. And one of the other big stories is that Airbnb, everyone knows this, right, is the place to stay.
Yes.
Might be trying to tap into the airline market or in-flight experience a bit.
Yes. Yeah, so part of our HyperChange TV YouTube channel, we do a series called Moonshot Monday where we pitch a crazy tech idea. This week it was Airbnb buys an airline. I think this is fascinating from a couple angles. They're not just trying to be the place where you stay when you go on a trip, but they're trying to be the place or the site that dictates what you do on a trip too with their new experiences product. And when they unveiled that, they gave kind of a sneak peek into their broader vision and said they want to get into flights and sort of be this kind of, think of Amazon of travel, like anything you want to do when you travel, when you book a place to stay, when you book where you go, it's all done through Airbnb. So I think flights is kind of eventually on the roadmap for their vertical integration. And I think it's a cool kind of strategy to bypass the traditional IPO process. If they were to merge with an airline, I picked Alaska Air Group because I think they have the most similar customer overlap. They could skip the traditional IPO process, merge, vertically integrate into flights, go public. I don't necessarily think that's a very practical idea, but I think it's fascinating and definitely something to think about. You know?
It's a moonshot.
It's a moonshot, exactly.
All right, Galileo Russell, author at Seeking Alpha, thank you for joining us.
Yeah, thank you so much for having me.
All right, well, for more information on Seeking Alpha's marketplace, visit seekingalpha.com/marketplace, which you see on the screen right there.